Peter McGuire now joins in to take us through what he's making of all that action in the commodity space. Morning, Peter. Thanks for joining in. Peter, first up on crude, what is the outlook at $57 a barrel? Is it looking like a buy? And I'm asking you this because you've also got an OPEC meeting lined up.
Well, good morning, Samino. Yes, I think it probably is a little bit of a buy. There's probably a little bit further upside. We're a week a Thursday, tomorrow week, I should say, is the meeting in Vienna. I'll be attending that. And I feel as though that the consensus at the moment, you'll probably look for an extension as far as cuts for those production cuts from March 31. So they may strap another 3 months on there. They may strap another 9 months. There's overhang as far as production, and that seems to be the great cause and concern for OPEC at the moment. And there's some internal geopolitics with Iraq as well.
Right. Peter, so, going into the 30th November meeting, is there at all any expectation of strengthening of an agreement beyond March, or will that come only later, closer to March?
I think it will be an extension. I feel as though that it will probably gain momentum over the next couple of days as far as, rhetoric and market commentary. What happens on the floor of OPEC? Having been there a few times, the press and analysts are introduced to the greater throng of OPEC officials, and then they go away, they go downstairs and they battle it out upstairs in a very extensive dialogue to try and determine what they need to do to get to where they have to go. And then they're presented to the market and to analysts. So it's going to be a very interesting Thursday the 30th, because this is quite unique in the sense that it's been an ongoing process since this time last year when they were first introduced in late November 2016 at the OPEC 171st meeting.
Right. Peter, moving on from crude, what is the view on base metals? Do you have a constructive call on steel, aluminium, copper at these levels? And also, if you do have a constructive call, then I'm assuming taking a cue from that, metal stocks could be a good play, at least in the near term.
I think, Samina, where there's trending at the moment, there's further push to the upside. Globally, the demand picture hasn't waned too greatly, and they're still relatively cheap. You look at the prices of nickel and aluminium, copper, well off their highs, and I feel as though at the moment, it's probably on the back of crude to some extent, that there's a little bit more momentum to that commodity market, in the sense of strength and price. So I wouldn't be surprised to see this rally continue over the next couple of weeks, and probably leading up all the way to Christmas. So it's not a bad place to be for producers and for miners, of course.
Right. Peter, on the currency front, what do you believe? Because on the dollar index, we've although strengthened from 91, but we are still hovering close to 94. Certain corners of, certain economists are of the view that we could possibly reach 96, 97 levels as well over the medium term. And in consonance with that, what do you feel about the pound sterling as well as the euro, the recent strength that we've seen on both? Do you think on the euro will be bound at around 1.2, 1.21 at best on the higher side, and on the pound will be just close to 1.3, 1.31, because the most concrete statements from the central banks of both these places are already out?
Well, I think a couple of things. First off, it surprised everyone how quickly it's bounced from that 91 around about 6 or 7 weeks ago to that 94-ish. And yes, you might see it continue to the upside. Certainly if you see a rate rise or something mooted from the Fed. Now, there's the other side, of course, that as far as euro, they're trying to do everything they can to try and stimulate over there, and they're not having a great degree of success with, record low inflation and just an ongoing, euro grinding a little bit to mediocrity. As far as the British pound, I think it's a concerted effort to see if they can, get a little bit more strength there as well. But at the present time, I think that probably the US dollar is going to rally a little bit further to the upside, and that should put a little bit further of a handbrake, I think, to any of the other currencies in the short to medium term, at least over the next couple of weeks. The jury's out. Let's see what Janet Yellen does, and I think that's where the world's, sitting on its hands waiting for something to happen.
Peter, what's the trade on the dollar rupee pair? The rupee has been showing some strength in the last few days, especially after the Moody's upgrade that came our way last week. I know the central bank back home, of course, is comfortable with the rupee trading that 65 half kind of range. But in the near term, are you expecting this rupee to strengthen further from these levels, maybe even go up to 64?
Well, it may do. I mean, it seems to have a mind of its own, and it's still fairly range bound. But yeah, I wouldn't be surprised to see a 64 and a half sort of handle on it in the next maybe a couple of weeks leading up to Christmas. I think that the potential's there, and it's just a wait and see approach. And fundamentally, the great storyline as far as the economy. I don't see anything negative there to really put a dampener on it. And I think it'll probably continue to be, as I mentioned, range bound. And it may take that 64 number out probably around about, end of January, start of February. But let's just keep an eye on what's happening as far as the US Fed. And that'll be a bellwether test as far as, what we're all going to understand as far as moving forward into 2018.
Right. Peter, what do you feel about precious metals, gold as well as silver both? Do you think that 1300 is a little insurmountable?
No, not necessarily. The handbrake, of course, is where the Fed raises rates. I still believe there's enough uncertainty. The correction down from 1350, 1360. The geopolitical heat came out of the market as far as North Korea. The euro, the oil market is. There's not a great degree of confusion there or issues, when that talks as far as Iran and Saudi Arabia and so on. So there's nothing really to push gold higher at the moment. And if US dollar gets an uptick as far as interest rate, then, the US, the Fed, then that's going to underpin the US dollar, which in turn I think will take a little bit further heat out of the gold market. But I still think it's probably cheap buying in a lot of ways. That $12.60 to $12.90 range, it's very, very cheap. And I feel as though that it's not a bad place to buy. And I still think there's probably, plenty of upside. I'm not going to say it's going to be a Bitcoin sort of fiesta, but I think there's probably a little bit further in gold over the next year or two.